Hello folks, this is Naeem Alsam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video. What we're looking at the markets is what the Federal Reserve is going to do with respect to its monetary policy framework. That is where the entire focus is among investors and traders, and the focus is on two critical elements. What the Fed is going to do with respect to its interest rate. Are they going to keep the interest rate at its current level, which is sitting at record low? Secondly, what the Fed is going to do with respect to its monetary policy, and with that what I mean is with respect to its asset purchase program, whether the Fed is going to continue to intervene in the market and for how long. These two critical elements are very much going to determine the framework for the Federal Reserve monetary policy, and this is going to have an influence not only on the stock market but also on the Forex and commodity space as well. Now, if the narrative is very much taken like that, yes, the Fed is still is likely to remain accommodative, and they acknowledge that yes, there is an improvement, that message could send the equity market higher by another 10% or so. But the move for the dollar index to the downside could be quite substantial, because if the Fed says that we are going to keep the monetary policy like this for an extended period of time, and the narrative is that yes, the Fed is still very much accommodative with respect to its monetary policy, what do you think is going to happen? The dollar is going to face more selling pressure in the coming weeks and in the coming months. Something else which has also influenced the stock market today is the hurricane situation over in the United States. Hurricane Laura has landed on the coast of Louisiana and Texas, and it is a category 4 hurricane, meaning it is a very strong hurricane, and that is likely to have very adverse economic influence on the US economy. Unlucky for Americans who are already dealing with the current pandemic situation, now they have to face another natural disaster, and all of this may have much more adverse influence on consumer spending and consumer sentiment as well, and that will influence the entire economic health of the country. Now, speaking of commodities, what we're seeing is we are expecting a bit more move in the gold prices. Why? Because at 1:30 p.m. UK time, we are going to see the initial jobless claims and the continuing jobless claims. Of course, the expectations are for this number to continue to recover, and we have seen a slow recovery. But the key word over here is we have seen a slow recovery. But having said all of this, if the number falls, the jobless claims number falls below 1 million, that means slightly bit more strength for the dollar index. But this strength in the dollar index may not last for long, because investors will remain very much focused on the Federal Reserve's monetary policy review and the framework of that, and the hints that can be dropped within those frameworks and in that speech when the Federal Reserve's Chairman Jerome Powell will speak and deliver his review of the monetary policy. That's all for today. See you guys next time.